The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, first trading day of December the 3rd. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock until noon Eastern Time at 877-927-6648. Thank you, Steve, for 2 great hours. Much appreciated. Straight after this comes Larry Pesavento. Then we've got Daryl Martin, Dave White, Ken Shreve, back here at 4 o'clock till 6 with Tom O'Brien. And just a full day of programming. Don't forget, this is a perfect time to get your Tiger Salvation Army dollars. You get go to the front page and read it. You get a fabulous situation where it's a win-win. Not only do you get a bonus for getting your Tiger dollars so that you can get our products here at TFNN, but you also get a tax deduction. I mean, I don't know what more you want than that. Now, what's very important right now is that the Dow had been up earlier about 50, 60 points. Now it's down 31. This is a very important, excuse me, this is an important moment. Why? Because the price of both the E-minis that I'm showing right here, if you're looking at Tiger TV, you will see that on the left column, this left block, I've got the E-minis. This is the December. I'll still keep trading these Decembers for just a little longer. You will see that the E-minis are getting, they're in leg C, and the MACD is at 90%, and the MACD is very strong. The stochastic's at 90%. A very quick move up. What that says very often is that you can get a powerful move to a leg C, and then it takes a little bit longer to get to that D, but it does get to the D. And what I teach in my courses is that you've got to learn in the momentum of a move up, the initial thrust up. Sometimes it's not a thrust, it's just a stair-step move. But if there's a thrust up, as there had been from that turnaround on the 16th, I think 16th of November at 1340.25, with a great follow-through right above the 200-period moving average, that's that blue line, kind of mauvey blue line. That is the torque. What is that? That's like if you're used to cars with gears, that's first gear. It gets you going, and then you can put it to second and third, fourth, first, sixth, seventh, whatever it is. But that first gear is what gives you the takeoff speed. If you're in automatic, it does that automatically. Now that I'm going to have to use different analogies over the coming years. Because why? Because they got these variable transmissions, so that it's already just one gear. And it uses a mechanism whereby it slowly moves over to another gear. They have different methods of doing it. It used to be done with rubberized belts. Now, of course, they've got all sorts of belts. But basically what happens is that torque, that initial thrust, that's what you got here. And very often what happens when you get that powerful move up, takes you to C. This is leg C. It could be leg D if there's no new high above 1424.00 in the E-minis, December E-minis. But there's tremendous support at 1403 to 1397.98. That's the way I'm looking at it right now. Now, there's something else that's quite fascinating to me. I'd spoken of this for ages and ages until it sounded almost boring. But, in the market, nothing is ever boring. If it repeats and constantly repeats, you want to keep doing that. You don't want to defy the odds. You don't want to be that 1 in 13, the one time that it doesn't do that. You want to be the 13, because that's where the majority of the odds are. And in this particular instance, everything is, so now let's see, I've got that. I've got to make that a little softer because we've got an echo here. Give me 1 second. I'm not going to go through this every time. Do I always have to forget to put the, there it is. All right, we're on silence. There we are. Quiet. I can see. I just want to see the charts. Yep, there it is, left side. So this is the left side. The middle one is the weekly chart. And the right side is the monthly chart. So we'll be going away from this very soon. Now, in my service, At the end of the month, I always show monthly charts. I always show the monthly charts with the technicals of the Dow, and I show different charts that I think are really important. I spent a lot of time. In fact, I spent a lot of the weekend on these particular charts for the Dow, based on the daily, the near-term daily, the intermediate-term weekly, and the monthly. I spent a lot of time. So I gave my outlook. I gave exactly what we're looking at, why we're looking at it, and what will happen. And in my webinar that's coming up, the 2-day webinar, this Thursday and Friday, all day. Not only that, when the market closes, we'll be looking at what trades to possibly put on the next day based on the ChapmanWave methodology, based on my opening call work, etc. There is still time to sign up. And the way I'm formulating this, because it's going to be archived, I know a number of people have said that they want to, if they're unable on one of the days, would they be able to? Yes, for 30 days you'll be able to go through it over and over and over. So what I've done is I've formulated it in such a way that I will cover in my CD introducing the ChapmanWave methodology. Here's the book. This is what it looks like. And you've got these chapters. How many chapters are there? It goes to chapter, I should know by now, chapter 27. And the exercises, the reviews, there's opposing and complement. A lot of what I'm going to be doing, even though I'm going to be teaching peak A, peak B, a leg goes to a peak as soon as there's a lower high bar. Otherwise, it's a leg. It just moves horizontally and higher up or lower down. And I'm going to teach all that. I'm going to teach you the wave count. But more importantly, I'm going to teach you the structure. What do I mean by, in this particular instance, complementary price movement? Well, look at this. That's not the chart I want to show. This is the chart I want to show. This is not fully notated. I haven't really caught up. Look at the way this particular chart on the right has made an arch formation to this peak E top. At the same time, this one made a decline down to a trough D. I believe it's a trough D bottom. Well, it turns out this is the dog. No, not woof woof. It is the ProShares Trust short Dow 30. This is the short side, one to one, but it really isn't 1 to 1. That's why in my opening call, we're wanting to buy the DDM. That's the 200% long on a particular move down. Why? I'm anticipating that we are going to see higher prices, and I'm anticipating that we're going to see at least a leg D. And I'd like to play that and see where it goes to. Maybe it's just fractionally higher than where we are. But that's the way I'm looking at it, because if you're basing it on a methodology, then that's what you want to do. But look at the way you've got a mirror image here, almost a mirror image. And this is what I do when I show in my daily work, when I show the, look at this. Let me get rid of that. Just for the moment, I'm going to get rid of this. I'm going to talk about this in a moment. You see this? This is the VIX 120-minute chart. You see the way it's sort of cupping, making a cup formation? And this gives me a heads up to say, okay, you might think we can go higher, but we might be getting into a little turmoil here, a little tumultuous period with the political situation. Words, I spent a lot of time on Friday, my opening call, discussing words that the market evidently would like to go up. It's the words that are keeping them to go down, well, the negative words. So this is what we're looking at. There's a chance, just a chance, that the VIX can go above 16.98 for leg D up. That'll really pull the market back down. But what's very important about this particular move now in the 120-minute chart, you see that line there, that mauve line? That's 13,126 on the 120-minute chart. How the Dow holds any pullback that's occurring right now and how it closes today, it's going to be very important. Bonds are down. The TLT's down 56 at 124.23. The volatility index, the VIX, is at 16.33. The dollar at this particular point is down 33 cents at 79.82. So the weight of evidence is still saying, okay, a little bit of a pullback here, but so far none of these parameters have really been broken. If the TLT slides under 123, then I believe that the Dow should go higher. If the TLT is holding at this level, that's going to be very important. Let me just quickly get back to this particular chart that I wanted to show you. This is what I showed subscribers today, my opening call. Very comprehensive look at the markets every single day. If you look at this, you will see that there was a beautiful up channel all the way from 1994 to 2000, March of 2000. Then there was a beautiful down channel to the 768 low of October of 2002. Then a wonderful move to the upside, October of 2007 at 1576. Then a beautiful down channel. These channels with the inside track is what I will be teaching Thursday and Friday. There is so much information that you don't actually need to know the ChapmanWave ABCDs, although absolutely, if you do learn them, it's a tremendous bonus. It's tremendous additive to whatever other techniques you're doing. But I'm going to show the chart patterns. Now, this is what's key right at this particular moment. If there is a failure in the next day or two, and the Dow fails to get into the 12,190, 13,190 area, 13,200 in the next couple of days. Instead, it actually plummets and goes down to the 12,920 or lower level. All of a sudden, for the first trading day of December, that down channel line that I drew in only because of the patterns that were forming. This is not a prediction. This is saying there are two trend lines that are really important that have been working through the month of November. Will they continue to work through the month of December? Well, we'll see, because if the S&P breaks to a new high, a recovery high of 1474.52 or higher, exactly to the penny or higher, that will say the up channel is intact. Get rid of all the stuff. It doesn't apply right now, and it means you're going to the upper band. Now, what's really important about this is that every move since 1994 in the S&P has gone to at least two buy modes in the ChapmanWave. That's why it's so important to learn about these buy modes, peak D, E, and Fs. It went to the peak F and then peak D in 2000. It pulls back and only has one move to the downside to a trough F. But on the way up again from the low of 2002, it goes peak A, B, C, D, E, pulls back for 1 month, and then starts a brand new buy mode, A, B, C, D, and another E, right at that 1552 level. It goes to 1576.09, just slightly higher, 14 points higher. Is that 40 or 24? 24 points higher. And then in October of 2007, it plummets down to a trough F. Look at the consistency of the notation of the lettering. Then it goes peak A, B, C, D from 666 in March of 2009. It goes peak A, B, C, D, 1370.58, 2011, and it pulls back, trough ABC, starts what became the new up channel support level. There's another one inside it, which I drew, and that says you've gone to an E and an F with a parallel wave count. That means every other buy mode since 1994 has at least had two full buy modes. We've only had one. That's why if you go to 1474.52 anytime in the next couple of months without breaking the recent low, that's very positive. I'll be back, 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman. Dow's down 32. S&P's down $1.69. We go through the numbers. Comp index is unchanged, 30.10. We've got gold up $4.50 at 17.17. Silver's down up 44 cents at 33.65. Copper. Now, this is going to be very interesting. We've got the HGH, right? HGH. Did I do anything with HGH? No, but I should. Leg D up, regardless of which contract I use. High-grade copper is in leg D up. So this is very interesting. You've got copper in leg D. You've got the E-minis, which trade almost 24 hours a day. In leg C, you've got the Dow and the S&P now having caught up in leg C. And what does that say? It says a couple of things. And this is what's going to be important. High-grade copper having come back is a nice sign, but it's not a great sign. Copper has to really decisively break. This is the, I'm looking at the HGH, which is March. The March copper has to really push over 3.7. I'd even say 3.7375. It has to get back into the high upper level above the 200-period moving average in the weekly chart. It has to cross that little doji candle of 3.77, the high of the 18th of October. To me, that would be important. So it hasn't done it. It says, okay, just got to be a little bit careful. Now, what I'm looking at also is that in the very short term, if I can just do this for 1 second, NQZ12, just use the 12 contract, the E-minis of the NASDAQ have also just formed a peak E in the 120-minute chart, and that says, okay, don't get too excited about this peak E. Why? Because there is, in fact, a rectangle formation that's unfolding, and that says, yep, the NQ could pull back a little bit more, could even test the low of the 30th that was at 2667, and it's at 2680 right now. So it's not that far away. It's enough to, create a little turbulence on the short term, but this is still leg A to the upside in the daily, and the MACD is at 92%, and the I keep saying that the MACD is very strong, and the stochastic is at 92%. That to me says that there's internal strength, that at worst case the 2648 level should hold if there's going to be a peak A, and you take a little time, 1 to 3 days. Now this is very important. If in fact, and I suspect corresponding to the Qs, which is on leg B right now in the ChapmanWave, I have that pattern that I call the squash between the stochastic and the MACD, and that says this particular move should accelerate to a leg C, and at that point you might take a little bit more time before making a D, and then you've got to be careful because it could be quite a bit of a pullback. So I'm looking at this week as a potential to see slightly higher highs. I say slightly, I just don't know, but right at this particular point I'm saying slightly higher highs. And if Apple is going to be part of the benchmark that we're using, that is in leg D right now. But the stochastic's at 92% and the MACD is still very strong. That's got that squash potential. And that says there's a good chance that Apple is going to test the high of, so the high today is in the 594 area, 594.59. 603 is the candle that I'm looking at. To me, that's the test of between 601 and 603 to 605. That's going to be the test, not just for Apple, but for the general market as well. So if we can see a mild pullback here, that's going to be very important. I do say mild, and I also mean very short in time. It shouldn't be more than 1 to 3 days to make a peak. That's going to be important. Now, what's fascinating about this in the ChapmanWave is that when you're looking at the candle that's just formed in the Dow, this is leg C, and if it makes a peak here, having only gone slightly higher than, look, peak A was 13,011. Peak B hit the 50-period moving average and went to 13,062, 50 points high. It's not a big deal. But if this is peak C, only 13,087, 30 points higher, it's saying that there is tremendous energy in the technicals. There's no veracity in the price movement over the last week because the price movement has been very limited. So I have to look at that, and I've already drawn in an arch formation. That arch formation says that unless there is a really powerful move that takes it down to the 13,290 to 13,310 area, and it has to happen fairly soon, I'd say by the end of the week, probably early next week at the latest. We're looking at this as being just yet another counter-trend rally. But within it, there are some stocks that are acting really well. And that's important. The choice of your stocks right now is imperative to your market health and wealth, because there are stocks that you cannot ignore as being strong, and there are stocks that you cannot ignore as being weak. I'll be right back. 877-927-6648. Now I'd love to take your calls. Dow's down 25, S&P's down 1.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. 877-927-6648. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks, we're back. Okay, so I was asked an email, and the question was, in your overview, besides all the chart work and everything that you've given today to us subscribers, and it's just a huge amount of work, daily, I gave the daily as I usually do, just this one here that you can see right here, this one right here. Nope, not that one. This one right. I'll get it. This one right here. No, not that one either. All right. Well, it's got the daily, and I've got it somewhere. Daily, what's going on? Don't tell me I lost it. Yeah, there it is. Okay, to show the similarity between this takeoff and the last takeoff, which was right there. Let me just show you. But I also did it with the MACD and stochastic. In other words, all the technicals included. You can see that so far the match has been pretty good. That 9-period exponential moving average of 12,949 is really what you want to be looking at. Now, what's important is that there aren't similarities in the overall structure of the market, because the IBD stocks that were leading before are not now acting the same way. Some of them, in fact, have come off the list, the top 10, top 20 list. There are new ones. So, and we've had UTX and other stocks pull back really sharply, and now this is a little different. They are rallying, but they're rallying as of now. I don't yet in the weekly charts have a confirmation that my Dow Quartet, GE, IBM, Triple M, and UTX, have the strength to go to new recovery highs. I just don't have that yet. Not to say they couldn't do it, but not yet. Now, here's the other thing. As long as the volatility index, as I was talking about before, remains low in the teens, especially between the 17 to the 15 area, that's going to provide buying, the structure of buying pressure. That's important. So the moment that the VIX goes into the 19.80 to the 20s, suddenly everything changes. The selling pressure is going to be maintained. It's not going to just be a one-day, that's if it holds in the 20s. Not going to just be a one-day pullback and then it goes right down, the S&P and the Qs go right back again. But if you look at the structure of, let me go to the white charts for a moment. If you look at the structure of the Qs in terms of the pattern that's unfolding, both on the weekly and the monthly chart, the weekly says, look, that's fine. This is a high-level consolidation. It's kind of whippy. It makes a possible M formation, but it could also turn out to be a W formation with two cups by trying to get back from the 66 area towards the 69, 70 area. That'll be very positive. But wait a minute, you cannot rule out the rising wedge in the Qs in the monthly chart, which has held beautiful support and is trying to get back to the resistance level as the apex is getting closer and closer. So while I'm looking at that, what I need to say very clearly is that the MACD is flat to a little bit negative in the monthly chart, but it hasn't got a wide beta, so far there's no selling pressure per se, and the stochastic's at 80%, and we've just begun the very first hours of the very last month of 2012. I'm going to go to our first caller. We've got Rick in British Columbia. Hi, Rick. How are you?
How you doing there, Basil? A long time. I haven't talked to you for a while.
Yeah, I'm doing well. How are you doing?
Really good. Hey, Stephen mentioned something that made a lot of sense to me about IBM. We were looking at a long-term chart on IBM.
Yes.
And, like, I put it on a yearly, monthly, and, you know, really, from a volume point of view especially, you know, it's been going up on fumes relative to, probably the general market. But, you know, like if you put a 5-year monthly on it, for example.
I'm showing that right now.
You know, you take a look at where all the volume is. I mean, you know, just to be, you know, friendly to the volume, you would say, you know, 140 plus. It's been a pretty light volume. And I put it on a yearly even just to get a real picture of it. And, I mean, this year's volume is going to be, you know,
Rick,
probably 20% lighter than last year, and last year was lighter than the year before.
Let me just speak to that issue. There are a couple of things that I look at. I always have volume on the, not always, almost always have volume on my charts. I have it on the daily, weekly, monthly, but sometimes on the very short term I might not have volume. What's really important to me is in this particular instance, it's the chart formation. IBM, I believe there's a really good chance, which tells me that the market probably has limited upside potential, although I'm still seeing a positive side to the overall market. IBM is saying to me that it's made a double top. The double top is from the high of 210.69 made in April of 2012 and 211.79. So that is a $1.10 or 19 cents higher. Now, that pattern in the ChapmanWave said that if you use my technique, which is to use the fast-moving average of the MACD, especially in the monthly, it kept you in IBM all the way to peak E, and that's when the fast-moving average broke lower than the slow-moving average, and the stochastic had a right shoulder failure on this recent move to the upside, fractional nominal high, and that nominal high was based on, in my work, very poor technicals. I believe that because IBM has broken 1/3 to a half below the left side lip of 210 to 211, there's a real good chance that not only is it going to test 181.85, the low of July in the cup formation that's just formed, I believe it's going to go down, and I would have a target for IBM somewhere in the first quarter between 168 to 158, and that would be my target as a first period of selling an IBM that has sustainability. Now, if IBM goes to 183 to 182 and doesn't close below 181.85 or doesn't even hit 181.85, then there's a rectangle formation that says it can continue choppy in a sideways move, and that sideways move says it's probably got tremendous resistance at about 195 to 198, and that there's a good chance it'll keep making slightly lower lows rather than very much more higher highs. But it can make a W formation, 2Us, that's a double cup formation, if that 196, 198 level is taken out. But at this particular point, I'm with you. I see IBM for different reasons as pulling back, and I had drawn this triangle, these two triangles, kind of like one of the Gartleys, and that says that if IBM was to break down, I have to now move it a little bit to the side because I always need to use. There you go. Okay, that's a little different. That says that IBM has 161 as the 200-period exponential moving average support, key support, and that goes into the week of the 8th of February of 2013, right on the 161.31 200-period exponential moving average. So that says to me that there could be some leadership disintegration going on, and the daily chart's very clear because that says made a peak D-top in the ChapmanWave at 211.79. And now it's come down, and if it closes underneath 188.25, good chance in the test the doji low of 184.78, closing decisively below 184, and you're looking at the pattern continuing down. So that tells you that there's very selective leadership in the Dow stocks because IBM was a leader up, but it's one of the ones that on the way in this particular consolidation phase is starting to show weakness, and it's in my weekly is in a sell mode. My monthly has gone to a sell signal. I haven't yet got the confirmation that it's a sell mode until it closes below 181.85. So that kind of corresponds a little bit to what you're looking at using your volume. So
that's exactly right, Basil. Yeah.
Okay, so it's not to say that there isn't upside potential, because if IBM does close above 194, it could go, but it looks like at best we're looking at two cup formations, and that the maximum I see in IBM at this particular point is 213 to 215. If there was just a fantastic turnaround and the general market got the go-ahead to blast off to the upside, I suspect it's not the case. IBM's telling me the truth. I was speaking to someone the other day, and they said IBM is not the business it used to be anymore. It's a different kind of business. They weren't sure at all why it went up that high, and I respect this person who's really a savvy fundamental analyst. So that's the way I looked at it. So it kind of corresponds.
And just going back to reiterate what you said about Apple, so far it's made a peak C. You're looking for it to go to about 605.
Oh, Apple. Okay, I've got a question that I have to ask you. Someone in the den asked about, Z in the den asked about, what please ask Rick about Copper Fox. Copper Fox?
Well, actually, it's funny you say that because it's just that property is north of where I live. And I looked at the chart on it, and it's not like we're getting big power up. Like we're spending millions of dollars to get power up to the gold properties up here.
Yep.
And there's possible takeover, so it's one of those things. You know, that thing there could go to 70. It's how do you say that? It's those are the little ones where you.
Are you buying? You put it away, huh?
Yeah, I would say that thing could go to 75 cents, but it could be a taken over because it's not a mine. There's so many properties like that, right? Where the potential's there, but they got just got to find money to build it. So
yeah, I heard a very interesting story the other day. Someone was telling me that there are mines in South Africa and in the areas around South Africa that people have the rights, the lease or the right or their own. I can't remember. I think he said their own. One particular company has 75,000 mines. They actually called mines. So I was shocked. I didn't know anything about this. So I thought that was very interesting because it's back to the days of the 1840s and 50s here in the United States and in South Africa at the same time, where you had all these people prospecting. But I was kind of fascinated. And just a real quick thing, you asked me about Apple. I've got Apple in leg D in a very quick peak, A, B, C, D, and that says it could pull back, but my MACD and stochastic are very strong. I would not be thinking of shorting Apple. I need to see it get to the 603, 605s, maybe even 614. So I hope that helps you, Rick.
Yeah, no, that's good. On a weekly, though, Apple's pretty late from about 550? I'm not even looking at it.
Yeah, no, Apple's at 590 right now, and it dropped to 505 from 705, 200-point decline. You can see a bounce, and this bounce should take it to moving average right here. I think Apple has a chance to get to the 605, 615 area. And don't forget, it is the holiday season, so they could benefit. Thanks so much for calling, Rick. Always love to hear from you.
Thanks, Basil.
Thank you. Now let's go to, we've got Helen. Helen in Largo. Hi, Helen. How are you?
I'm good, Basil. How are you doing?
I haven't heard from you for a while. You doing well?
Been busy.
That's good. Busy's good. I always say busy's good.
Listen, Basil, I've got my eye on a little graphite stock, NGRC.
Wait a minute. Do you receive a notice in the mail about graphite?
I have not, no.
I did this weekend. Every once in a while, I'm off all those lists, but every once in a while, I get one of these things, one of these people that says, if you buy one, it'll go 2,000% higher, and I always throw them away, except I was looking at it, and it had this whole thing on graphite, and I was looking at a chart of GRPH, and I thought, that is an interesting stock. They must be pumping it because all of a sudden there's volume and it's acting well. So now let's look at your stock, which is NGRC, which I have never heard of, and I'm going to do it right here. You see, it's the same thing. Nothing. And then out of the blue in September, there's this whole buzz about this particular stock in terms of price because all of a sudden, instead of one little dot, instead of trading 300 shares, all of 300 shares on the 21st of August, or 10,000 shares on the 22nd of August, suddenly you've got in September, it goes up to 81,000, and you get huge price movement between 0.11 and 0.50. So now I'm going to ask you the question, do you actually have any of this?
A friend of mine bought into this, and I thought, maybe it would hit $1 again, because it looked like it had some volume at $1.
It did hit 120, just over 120, yeah?
Mm-hmm, yeah, so we're basically looking for a little quick profit and pull out again,
Okay, so this is what I'm going to tell you. I got someone in the den saying, get out. But, I have a different attitude. And I know that, Helen, you've been in the market a long time. You don't get carried away. You're very organized. Your thoughts are, you wait for clarity and then you strike. So this is what I'm going to do. I'm doing a little ChapmanWave notation on this right now. And then we'll come up and we'll treat it just like any other stock. And as I do, this is going to be a gamble no matter what happens. So we'll be right back with Helen and Largo looking at NGRC, National Graphite Coal.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed down a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Dow is down 12. S&P's up 1. I have to tell you, there is buying. I've shown it to my subscribers for days now. I said there is buying pressure. It's the politicians that keep tanking the stock. So this is a very interesting time. I want to see the buying pressure eliminated, and then we will see, when the VIX goes much higher, a pullback. Meantime, we're looking at NGRC for Helen in Largo. Helen, I've just done a little work on the 120-minute chart. Now, I don't even have to tell you that this is a really low-price stock, even though it's had more volume than ever. But most importantly, I've got in the daily chart, NGRC, I've got it in, if I use what I call the phantom peak for very low price stocks like this, I've got this in leg D now. The technicals say that the MACD is still very good and the stochastic's okay. But we're talking about a stock that on a percentage basis has the capacity to drop 40 to 50% or jump 40 to 50% at a moment's notice. I'm going to recommend you treat this just like any other stock, even though you and I know that the general listener out there mustn't touch this. You've done a little work and you've done a little research. And I have to tell you, when I read at how much graphite is being used by the new cars and new products and the iPhones, etc., I wanted to ask Dave White about this. Maybe I'll call him this afternoon. But I think that you've got something here just on a purely speculative thing. I wouldn't recommend anyone else do it because Helen's been there before. She knows what's going on. Now, I'm going to recommend this, that you nibble. Just when I say nibble, I mean just tiny little bit here at 0.71. But that's really not the position I want you to get. At 0.63, that's when you can start the real position. But even then, this has to be a very minor part of your portfolio. I recommend that you nibble at it there. And what I would do is I'd put the price in. Don't let them give it to you because they're going to mess around. You want that price. And folks, whenever you see something that is 0.7180, if you get 4 digits, you know that this is what they call a pink slip stock. So this is something that you got to be very careful with. But the reason why I'm saying yes is because of the way it's handling the 200-period moving average, the way the volume is coming in. Even if it's a pump and dump stock, I think you've got yourself a potential here for it to pop towards the 0.90 level, which is the high of the 25th. What I would do is I'd nibble here. I'd try to add a little bit more in that 0.63 area, knowing that 0.58 is really the 9-period moving average on the daily chart. So it's somewhere in there. You just want to pull back, and then that's where you're going to add a little bit more of a position. I wouldn't say a full-size position, but something there that's reasonable. This has to be a very small part of your portfolio. I don't have to tell you that. You know it. Now, I would recommend that if this gives you a really quick gain, then a chunk of it comes right off, and you can keep a little bit there just, for fun or just to see if it can actually go towards the previous high of 1.2, 1.24 back on the 19th of October, the week of the 19th of October. My guess is it's trying to head towards the top of the 0.90 area, the candle of the 25th, and at that point, it might become even more volatile. Mm-hmm. But yeah, it's a speculative stock, and that's my recommendation.
But, Basil, looking at the chart, I mean, you've got relative strength, you've got the MACD positive, you've got volume coming in, and it's...
But you haven't got history.
Pardon me? Yeah,
you haven't got history.
Yeah, but they all start from somewhere, So.
But it's got to come... that's why I'm saying to you, start a position. And now I'm going to give you something else since you mentioned that. If this goes to $9, 0.90... Mm-hmm. And then it pulls back and it only goes to 0.72 or 0.80 and then actually tries to rally up again, that's where I would add another little position. But all of this, keep it as part of a trading. Now, you're looking at this as a core position. Let me do some work over the evening, and by tomorrow, call me again and I'll see about it as whether it has a more extended move, okay?
Thanks, Basil. I'll have a good one.
It's the same to you. Thank you for that. Was Helen. Folks, let's just keep this real simple. The Dow, if the Dow can hold 12,950, that's going to be very good. Hold tight.